Moving on to Dalal Street, Indian markets extended gains after the announcement of RBI slashing repo and reverse repo rate by 50 basis points and left CRR unchanged at 4.75%. Sensex was trading up by 174.62 points at 17,325.57 with 28 components gaining. Meanwhile, the Nifty was trading higher by 61.15 points at 5,287.35 with 43 components gaining. The 30-share benchmark index BSE Sensex opened with a gain of 50.02 points at 17,200.97, while the broad-based NSE Nifty started with a rise of 40.40 points at 5266.60. Biggest gainers in the 30-share index were Coal India, Oil and Natural Gas Corporation, State Bank of India, Sterlite Industries, NTPC and DLF. On the other hand, Infosys Technologies, Reliance Industries were the major losers in the Sensex. To discuss more about RBI monetary policy and markets, we are now joined by Mr. P.P. Vora, ex-chairman IDBI, and Zakir Hussain Kapasi, market analyst and tax consultant in our studio. Vora, so Zakir ji, welcome to the show. Sir, was it a very aggressive and a positive step which RBI has taken now? Because the market was expecting 25 basis point cut, and of course there were another school of thought. They were saying that no expectation is the only expectation about this policy, and we are currently seeing the 50 basis point cut. What is the immediate reaction on that? Is the interest rate cycle is reversing now, which we were expecting for last few days?
Well, you know, the 70% of the economists had predicted that the RBI governor may go for a small 25 basis point cut.
Right.
Now, as against that, 50 basis point in one go is indeed aggressive.
Right.
And it is a signal.
Right.
The signal is that now the Reserve Bank will think more for the growth as compared to the inflation control.
Right.
So that is a positive step. Now, what has gone into for this decision?
Right.
The non-food inflation has been less than 5% in the last 3 years for the first time.
Right.
Plus the overall inflation also has been less than 7% for continuously for last 3 months.
Right.
So these are all very positive signs, and the government, Reserve Bank governor felt that now the time has come when the growth momentum will have to be given a signal as opposed to the inflation control. Because it is always a mixed bag for an RBI governor to choose that whether he should go for the growth or he should go for the inflation control, and he has to balance the two.
Right.
He has been balancing it the two quite nicely for last 3 years.
Right.
But when he started seeing that now the growth is getting impacted, and it had come down to about 4.1% in the last month, then in his opinion, he felt that the time had come when the growth should be given a priority as compared to inflation control, which was in any case reasonably under control.
Right.
So I think that is a correct step. The bank has done correctly. But as against that, kindly keep two more points in mind. One point is the Reserve Bank governor in his speech has indicated that further reduction in the rate is not immediately feasible or imminent. Now that has to be seen between the lines. When Reserve Bank governor speaks, what he doesn't speak is more important to find out. What he has not spoken is that immediately perhaps you may not find further rate cut.
Because it's a very limited scope he has said for the further rate cut.
That is very
important.
So that is a very important point to be noted.
So sir, the money supply, then the interest rate and the inflation are major factors which constitute this policy. Zakir ji, how markets have reacted on this after the policy announcement, and what are the major criteria you are seeing?
See, in continuation to what Mr. Vora said, that every economy which is growing has to have inflation taken together. You can't leave inflation behind and grow. So it's basically two wheels of a vehicle that they have to move together. If an economy is growing, inflation will be part of it. And as the stock exchanges positively reacted, which was very much eminent and expected that there has to be some cut coming in, but 50 basis point was a little higher and a bigger surprise. And I am saying it's surprise because it's a very positive move, and it has given a very good boost to the infrastructure sector. It will show its own results in the coming quarters and coming expected earnings of the companies which are more dependent on debt, and I'm sure housing sector and loan sectors, microeconomy, finance sectors would see a very positive trend coming forward. And as Governor has said that you should not look for too much of rate cut in the near future. That does not mean that it is totally ruled out and it can't happen itself. I'm sure if the economy shows a very positive sign with this cut, I'm sure Governor would give again a second look to the interest rate to further grow the economy. And I'm sure the sectors which will positively impact is infrastructure sector, which is the real need of the hour. That if the infrastructure will grow, government spending will also grow in a positive direction, which will take us furthermore in the economy to a higher scale.
Vora sir, talking about the macroeconomic indicators also, like the current account deficit, fiscal deficit, also government's ambitious borrowing programs also, and interest rate is not the only measure or the remedy to fight the inflation in. How do you view this entire situation?
When you take up the total situation of the economy, interest rate movement, as you rightly mentioned, is only one part of the story, and that would only impact the demand side. You will have to tackle the supply side constraints, which are being taken care of by the government and the fiscal policies also. Last budget has seen that. But the point what Mr. Kapasi has mentioned, kindly let us examine it in more detail. The point is, will it happen in the current financial year of 12-13? Yes, indeed it can happen, provided the headline inflation, the overall inflation, the food inflation keeps reasonably under control. The fiscal deficit is at least achieved at the level at which it was achieved, anticipated in the budget of the finance minister. In fact, finance minister himself has gone on record to say that we should continue to learn to live with an inflation of around 6 to 7%. Now the days of 5% inflation is gone.
It's gone.
That is what the FM has indicated now. I mean, very interesting indication he has given now. So that is another point. Third is the current account deficit. Now that is somewhat unsustainable. 4.3% of the GDP is perhaps one of the highest in the recent past. That will have to be curtailed. Otherwise, it will have the impact on the rupee dollar parity rate. There will be tremendous amount of volatility. So with the result that again it will impact the inflow of the foreign money, it will have the impact on the exports and number of other factors. Even the borrowing which has taken place in the dollar and it is now maturing for repayment, that will become very extremely costly.
That is costly.
It is several billion of dollars of the borrowing is there. And it is in the convertible bond issues. Foreign currency convertible bonds. So it is optional. So if the stock market price is higher, then they would convert into equity. But if the prices are not higher, then they would opt for the returning the money. Now that you have to huge amount. So I mean, it's a balancing act, and Reserve Bank Governor has done excellent skill in balancing it so far.
It was a tightrope walk for Governor also. Actually, Indian story is a consumption-based story. The domestic consumption always takes a center space. What do you think it will impact it on the consumption stocks like FMCG or consumer goods or auto sector and the interest rate sensitive stocks, maybe banking or real estate? Because we have seen today's market also, some realty stocks are extremely done well.
See, actually the growth is totally related to common man. If the spending of a common man increases, definitely the productions and the industries and everything would start growing. And as I have seen that people who are riding a two-wheeler have started going for a four-wheeler. A person who was having a mid-sized two-wheeler has started going for a luxury two-wheeler or a four-wheeler, and so on and so forth. The demand for consumables and bringing the standard of living has increased substantially in this last 5 years. In 5 years, there has been a massive change in real estate prices. Something which was available for 1/4 of the price is available today, more than 4 times, 5 times. So the real estate industry has seen a big move, and I'm sure there is a little consolidation which is happening right now. We might not see a sudden fall in it or sudden rise in it, but definitely the bottom line of the companies who are in construction would show a positive trend with this change in the policy rates, and I'm sure this itself will boost the consumption pattern
Right.
of a common man. When he has extra money in his pocket, he is definitely going to spend part of it,
Right.
and part of it he might save. So both the things are good for the economy. If he spends, it's good for the growth, and if he saves, it's good for the future of the economy. And government is in need of money, because government has decided that 65% of the annual borrowing, they want to finish it in first 6 months itself.
Right.
So there is going to be a lot of borrowing happening from RBI side also, and it will give a good avenue for a growth, and it would be a positive thing.
Vora, so let me take a cue from what he has said just now. As a seasoned banker, do you think the cost of capital now available for the corporates, because we have seen many corporates, they have postponed their expansion plans or their other activities also, as the cost of capital will reduce. Secondly, the investment climate in India as an economy, because we are being criticized that the economy is good, it's an emerging economy, but it's costly compared to the other emerging economies. What's your view on that?
Coming to the last point first raised by you of the raising of the fund.
Right.
Obviously, the cost of borrowing is bound to come down minimum by 50 basis point. In fact, the banker after banker who came on air immediately after the governor's announcement stated that the reduction in the reverse repo and repo rate will be passed on very soon by the bankers to the industry, and even for the housing loan, for the auto loan, and all other sectors. So it is bound to have the multiplier effect. Along with that, with the market looking up, if you can raise more capital from the stock market, which has been very sluggish for quite about 1 year or so, then number of companies will come out who has postponed their IPOs and FPOs for quite some time. They can be expected to come to the market, which will have the very positive impact on the very positive debt equity ratio. But equity will go up. So that is another good point that is going to happen. Third point, which the government has mentioned, which has not been discussed so far, is we have to await the result and the fine print. NPA, non-performing asset rules will be now modified, and it will be brought out very soon. Now what it will be, nobody knows. Will it be tighter? Will it be somewhat softer? What it will be? I mean, that's the more important, which is interesting to note now from Reserve Bank and regulator. So that is one point. Second point, which also is very pertinent to note, which has not been adequately discussed, that the bankers' exposure norm for non-bank, for the gold loan giving NBFCs has been reduced from 10% of the overall portfolio to 7.5%. Now, it's very interesting. That means if you are giving non-production loan only for the gold and the gold ornament, then your exposure loan norms have come down. So that means you are discouraged from lending more against the gold, which is non-productive. So overall basis, it will have a definite impact both on the raising of the capital by way of cost of capital and the borrowing. Now 50,000 crores of the tax-free bonds the government of India has already factored in the last budget. All the companies, they were expecting to come to the market from September, March, the half year. With this, who knows? These companies may advance their plans and they may come to the market immediately. 50,000 crore of the tax-free bonds.
Last question to Zakir ji, very short. Is there any enough retail enthusiasm as far as the primary market is concerned for the IPOs? And after all these initiatives taken, infusing liquidity, what is your reaction?
With whatever we have seen in the past, that the companies which have come with their IPOs, their pricings have been very high, and investors have not landed up with any profits. So I am sure investors are going to be a little more cautious with the pricing, and they would wait till the issues get listed, and they would definitely, the media has helped them get more educated on the valuation part. And thanks to the channels like yours, which is continuously giving good information on this type of things, it has helped them to evaluate whether they should put money now or later. And I am sure that the promoters would also price their issues accordingly so that they attract more money. And as Mr. Vora said, the debt equity ratio plays a very important role. And if the equity will rise, definitely the valuation of the companies would be better compared to rising of debt.
We are at this stage, the inflation is easing, but inflation is slowing, but slowing very slowly. And of course, RBI has taken all the enough initiatives and reforms and measures to curb in inflation and fuel in growth. Zakir ji, Vora sir, always pleasure to have with our own show. Thanks a lot for joining us.
Thank you.
Going on to